For more on the market reaction to the inflation numbers, let's bring in Charles Schwab, Chief Investment Strategist Lizanne Sonders. What do you make of this stunning reversal, Lizanne?
I think Mike had it right. A lot of this was technicals at 35.17 on the S&P. That was the point at which half the post-pandemic rally. And I think that probably triggered not just some taking off of hedges, but probably some short covering, which tends to sort of fuel an intraday switch on the upside. I think it's premature to judge anything beyond that. If you wanted to find something more fundamental to explain it, you did see a reversal in the 10-year yield. You saw a bit of a reversal in the dollar. In the case of the yield, that had jumped back over 4%. That's been a short-term driver and trigger for the equity market. And then maybe the thought is, such a hot CPI reading, is it sort of a last gasp? Does that put us closer to the point where we can start to look at the peak in the rearview mirror? So that's best guess as this is happening as to what fundamental reasons might be.
Yeah, the rally in the British pound, true. Also, I mean, that has been such a big focal point for the markets lately. So you don't seem quite convinced that now would be the time to buy.
I'd be really mindful of chasing what at this point looks to be a huge technical surge on the upside. But it's also the case, as I know I've talked to you guys on this program, I don't think anybody should be trying to pick individual days. Investing is not about, getting out and getting in at moments in time. That's just gambling on days and prices. And investing should be a disciplined process over time. And it's also a function of where your allocation is. If you've allowed yourself to get way under in terms of equity exposure, we're probably closer to the bottom, or maybe the bottom is in and you want to do some buying, but that's not an appropriate recommendation for everybody. It just depends on risk tolerance, time horizon, et cetera, et cetera.
So what fundamentally needs to change for you, Lizanne, to like the market in a broader way beyond just technicals and positioning?
Yeah, so I would say the collection of sentiment, technical, and breadth indicators all look pretty good for the market if you have, say, 6 to 12 month time horizon. Most of the studies are, as I think Mike said, there's no such thing as smooth sailing or a complete green light in this business. But most of the sentiment, breadth, and technical studies look pretty decent a year out, but still pretty bumpy in the next couple of months. I think we need to see further stabilization in yields and maybe the dollar as well. We'll get a little bit more color on what the trajectory for forward estimates are going to be. I think a stabilization in forward estimates is probably a key. Some stabilization in housing and PMIs, at least on the manufacturing side, which is a leading indicator, to sort of finish their descent and start to stabilize. So that would be the collection of more macro fundamentals that I'd be looking for. But we're in much better shape from a sentiment, technical, and breadth perspective than we certainly were even at the lows in June.